once again to the Bourse report. Today, we are going to do coverage of what would have happened in the first half of the year, both in terms of equity and bonds, locally as well as internationally. Let's jump right into it and look at what has been happening. Well, basically, local equities have been muted. International equities have been bounding up. And the bond market internationally as well has been thriving, whereas the local bond market has been somewhat subdued. Let's take a look at what's happening in the markets. So as you would see, what has happened is that the overall market has been flat. When you look towards the end there, you will see 0.03%. But what is this made up of? Well, look at this. Cross-listed stock, that would be Jamaican and Barbadan domicile stock or Bermudan domicile stock, peaked up at 15% somewhere in February, March, and then declined to contribute in terms of value-added 7.5% appreciation. But local stock, which is this red line here, stock domiciled in TNT, if you go back, what you will see is that the local market has been more or less muted, and in fact, local stocks are down by some 2.5% if you could go back to that original graph, first graph. Then what's happening? Let's look at some of the winners and losers. So next graph shows us that most of the gainers in the market, that is, of the 5 gainers, those would have increased in value. 3 of them, at least 3 of them, are external or the cross-listed stock. And when we take another look at those gainers, and we're trying to get that graph up, let's see if you can get it. Yes, so here it is here. You can see GMMB, NCBJ, and Sagicor all up 36%, 35%. Guardian is the only local stock, Guardian Holdings, up 27%. And of course, Agostini, very low in terms of liquidity, in terms of your ability to access those stocks, at 14%. Some of the declines, NFM, 9%, OCM, as low as down 24%. And what you would see is First Citizens is down 9.5%, and First Caribbean is down 9.5%. So mixed bag as you look at the first half of the year. Let's look now at what has happened internationally in terms of equities. And here's what you would see. Generally, all the regions have performed very well, showing good appreciation in the market, only with the exception of the Middle East and probably less so Africa. Latin America up 8.17%. The Asian region up 22%. Even Europe, the sick man of the world, is up 13.7%. So very good performance internationally in terms of the equity market. Investors could have participated in the Asian story by being in our Save Invest India Asia Fund and various other funds which are marketed and domiciled locally. Latin America, at the beginning of the year, the markets bounded up, then the Brazilian scandal, corruption scandal, and the markets went down, but still up 8.17%. Let's then take a look at what has happened in terms of the bond market and, shall I say, the fixed income markets locally. Well, there was only one issue in the first half of the year, which was for an average period, was for a period of 8 years and generated 4.1%. So it was oversubscribed, and there was very little chance to participate in other fixed income issues. But compare that, which was an 8-year bond out here, the 10 years is 4.4%. What's happening in terms of the money market funds, 1.3%, and deposits in the banks, just about 0.2%. This is what you have to look at in the context of inflation or headline inflation, 2.8%. What does it mean? It means that if you're investing in money market funds and so on, your real rate of return is below that of what's happening with inflation, eating into the value of your investments. Let's go internationally and have a look at what has happened in emerging market bonds. Well, as you can see, for the first half of the year, 6% and 5.6% in terms of high yield and investment grade bonds. Over the past 5 years, this would have given you, in terms of the emerging market space, about 45% cumulative return over the entire period in terms of the high yield, as well as 20% in terms of the investment grades. Some issues, of course, the debacle of Noble, one of the international bonds, continues to be a challenge in the emerging market space. What to do? Where to go as you look forward into the next half year? Well, what you can see is that TT equities have been muted, TT mutual funds, the rate is below that of inflation. So not much joy as far as that is concerned. Go for dividend yielding equities and go for money market funds just to mitigate the losses that you would experience if inflation continues at the same rate. International space, US equities up, US dollar denominated equities up. Good areas to be in, especially with inflation at about 1.7% in the US market. Go for dividend yielding equities, US dollar money market funds, investment grade bonds. Speak to us and we can give you much more detailed direction and recommendations as to how you can go forward in these particular markets. So this is the Bourse report. The only other thing that I would mention is that we had 2 APOs in the half year. First, which was undersubscribed at about 1 billion against the availability of 1.5. Indications are that the second APO, TTNGL, is more than fully subscribed, and we'll hear more about that, except to say that the individual bucket was undersubscribed, but in aggregate, it was subscribed fully. Let's hear what the official results are over the next couple of days. Have yourself a wonderful investment week, and look for us on the screen with regard to ways that you can communicate with us. This has been the Bourse Report. This is Subhash Ramkalawan for the Bourse Report.